Hello everyone, this is my presentation for financial performance analysis of Woolworths Group Limited. My name is Aashirwad and today I will present a detailed financial performance analysis of Woolworths Group. So let's get started. So Woolworths is a leading retail organization in Australia. As we know, there are a lot of competitors with Woolworths such as Aldi and Coles, but Woolworths is leading in this stage. Woolworths Group Limited is a powerhouse in the Australian retail industry, operating across grocery, alcohol, and general merchandise sectors. They have alcohol retail as well, called BWS. With a strong market presence and leadership in the food and grocery segment, Woolworths plays a pivotal role in shaping the retail landscape down and under. So now we are moving to the CEO statement interpretation. Let's begin by dissecting the CEO statement. Woolworths CEO has emphasized operational excellence, sustainability initiatives, financial performance, and future strategies. Notably, the company is focusing on digital transformation, sustainability, and expanding its online presence to meet evolving customer demands. So they have their future plans well settled. They are moving towards their future plans, and they are prioritizing digital transformation. They are introducing online shopping as well. They have launched their app. Their website is live from like years now. They have opened a online department as well. So this is a CEO statement interpretation. Now let's move to the next slide, which is liquidity ratio analysis. So uh, the current ratio in 2021, according to the financial report which was available on the Woolworth official website, was 1.36, but it is increased to 1.38 in 2022. And quick ratio was 0.96 in 2021, but it increased to 0.97 in 2022. The current ratio, which measures the company ability to cover short-term obligation, was improved, and so it is a really good sign for the Woolworth company. And the current ratio was also increased, and the quick ratio, which excluding inventory, also witnessed a slight uptick, indicating enhanced short-term financial health. Now let's move to the next slide, which is efficiency ratio analysis. All the data is front of you. Efficiency ratios provide insights into how effectively Woolworth utilizes its resources. Despite a marginal increase in return on total asset, a decrease in inventory ratio from 2021 to 2022 suggests potential inefficiencies in inventory management, which they can explore further, and we will also explore further this in our next slides. So let's we all together move to the next slide, which is profitability ratio analysis, and all the data is front of you. Woolworth gross profit ratio and net profit ratio both improved from 2021 to 2022. It indicates that Woolworth enhanced profitability and operational efficiency. Woolworth was the highest profitable uh, store in Australia for like last 3 years, and the second number there is Coles, but Woolworth is like getting really much profit, and they are leading the retail industry. These improvements in the data profitability ratio analysis suggest that Woolworth effectively managed costs and generated higher returns from its operations. I also work in Woolworth, so I know how they play with the employees and how they handle their work, and how they, like, managers are given tasks that they would hire a specific amount of employees every day so that they can manage their expenses as well. They are not like flowing money on the employees, and they are also cutting money in other store other things as well, but they are not cutting with the quality, so that's why they are still popular in Australia. Now let's move to the next slide, which is solvency ratios analysis. Solvency ratios assess Woolworth long-term financial stability with a stable debt to equity ratio and debt ratio over the years. Woolworth maintains a balanced capital structure and effectively manages its debt levels relative to its assets, ensuring financial resilience. All the data in front of you. Debt to equity ratio remains stable in 2021 and 2022, and debt ratio also was remained consistent. Now let's move to the next slide. Market performance ratio analysis. Shifting our focus to market performance, Woolworth market value, return on shareholder equity, which we also called ROE, and earning per share, which is also called EPS, are exhibited positive trends reflecting growing investor confidence and strong market performance. Woolworth have amazing market performance and a lot of shareholders are showing interest in them. Uh, these all the data showcase how well Woolworth have managed to grab the retail uh, store market in Australia. Like every people in the Australia knows about the Woolworth, and whenever they are talking about grocery shopping or some other type of shopping, they just first name they in their mind would come to Woolworth. As I already mentioned, I also worked in Woolworth. Sometimes some customer even come to buy such things which are not even Woolworth sell, but they still think that Woolworth is selling everything, so they might be this thing is also available there. Once a customer came to ask for a Ludo game, so and Woolworth does not sell that much game, so it was a kind of amazing thing that how Woolworths have captured the whole market and people think that everything is available there. So let's just come back to the topic and goes to next slide, which is return on total asset, which also called as ROT analysis. So now let's dive into Woolworth return on total asset. ROTA measures how effectively the company utilizes its assets to generate profiles. In 2021, Woolworth achieved an ROTA of 8.64%, indicating that for every dollar of asset, the company generated approximately 8.64 cents in profit. Moving to 2022, we see a slight improvement with ROTA increasing to 8.70%, suggesting continued efficiency in asset utilization and profitability. This indicates that Woolworth is effectively leveraging its asset to drive profitability, a positive sign for investors and stakeholders. Obviously, that's why stakeholders are interested in Woolworth shares. Woolworth also now giving option to their employees to so that they can buy shares for Woolworth so that they also can have profits, which is a good thing. Now let's move to the next slide, which is inventory turnover ratio analysis. Now let's analyze this ratio provides insights into how effectively Woolworth managed its inventory. In 2021, the inventory turnover ratio stood at 18.57, indicating that Woolworth sold and replaced its inventory approximately 18.57 times during the years. However, there was a slight decrease in this ratio in 2022 where it dropped to 17.61. This suggests a longer sales cycle and potentially slower inventory turnover, which could be attributed to various factors such as changes in consumer behavior or supply chain disruptions. But overall, it is still a good turnover ratio. Good turnover ratio. So now let's move to the next slide, which is inventory turnover analysis, but in terms of days. Building upon the inventory turnover ratio, let's examine the inventory turnover in days. The metric calculates the average number of days it takes for Woolworths to sell its inventory. In 2021, Woolworths took approximately 20 days to turn over its inventory, indicating efficient sales. However, in 2022, this figure increased to 21 days, suggesting that inventory stayed longer in stock before being sold. A longer inventory turnover period may indicate challenges in inventory management, such as overstocking or slower sales, which could impact the company's overall performance. So this was the thing which are like kind of become worse for the Woolworth, because some people will think that one day doesn't matter that much, but for a company even such which is such big, even 1 hour would matter. So now let's go to the next slide. Now let's shift our focus to Woolworth's gross profit ratio. This ratio measures the proportion of revenue remaining after deducting the cost of goods sold. In 2021, Woolworth's gross profit ratio was 20.24%, indicating that the company retained approximately 20.24 cents from every dollar of revenue after accounting for the cost of goods sold. This figure improved slightly in 2022, reaching 20.47%, reflecting enhanced profitability and potentially better cost management strategies. A higher gross profit ratio indicates improved efficiency in production and pricing strategies, contributing to Woolworth overall profitability. Moving on to the net profit ratio, let me just pull it down. Uh, Moving on to the net profit ratio, which evaluates Woolworth overall profitability after accounting for all expenses in 2021. Woolworth net profit ratio was 4.52%, indicating that the company retained approximately 4.52 cents from every dollar of revenue after deducting all expenses. The ratio improved to 4.65% in 2022, suggesting better overall profitability and operational efficiency. A higher net profit ratio indicates effective cost management and improved operational performance, contributing to Woolworth bottom line. Now, now let's analyze Woolworth debt to uh, equity ratio. This ratio measures the proportion of debt financing relative to equity financing. Woolworth has maintained a stable debt to equity ratio of 1.0 in both 2021 and 2022. This indicates a balanced capital structure with equal reliance on debt and equity financing. A stable debt to equity ratio reflects prudent financial management and ensures that Woolworths maintains an optimal level of leverage to support its operation and growth initiatives. Building upon the debt to debt ratio, uh, let's the this building upon the debt to equity ratio. Now we are going to examine the Woolworth debt ratio. This ratio assesses the proportion of assets financed by debt. Woolworth debt ratio remained consistent at 0.50 in both years, indicating that the company effectively managed its debit level relative to its total assets. This suggests that Woolworth maintains a healthy balance between debt and equity financing, ensuring financial stability and minimizing risk. Now let's shift our focus to Woolworth market value, which reflects the total value of the company's outstanding shares in the market. In 2021, Woolworth shares in the market was around value of around 46,800 USD, 46,800 million USD, which increased to 48,000 million USD in 2022. This growth indicates rising investor confidence and positive market sentiments towards Woolworth's future prospects. An increase in market value reflects stronger financial performance. Now let's move to the next slide. Return on shareholders equity, or ROE analysis. It measures the return generated on shareholders equity investment. Woolworth ROE increased from 70.27% in 2021 to 17.39% in 2022. This improvement suggests that Woolworth effectively utilized shareholder equity to generate high returns. So it's a good thing for the shareholders, and if anyone want to buy the shares of Woolworth, so from this data, yes, they can buy their shares. Now let's move to the next slide, which is earning per share EPS analysis. EPS calculates the profitability of Woolworth on a per share basis. Woolworth EPS increased from 1.58 in 2022 to 1.67 in 2022. So it's a good thing. So now let's move on to the conclusion. We have two slides for the conclusion, but I'm just going to quickly summarize this. So in conclusion, we can say Woolworths Group Limited has demonstrated resilience and adaptability amidst challenging market condition. With a strong foundation and strategic initiative in place, Woolworths is well positioned for continued growth and value creation, reaffirming its status as a leader in the Australian retail landscape. So this was my presentation. Thank you for your attention, and I hope you liked this presentation. Thank you so much.